Global reserves have just hit their lowest level since 1992, and somehow nobody's freaking out about it. There's no breaking news, no sweaty guy on CNBC, and no market panic. It's just been silence, which is weird. But there's also a reason why, and that's because it's been happening slowly, in the background. While everyone is busy arguing about whether AI is coming for their jobs or whether Elon Musk is even human, the global financial system has been quietly rewiring itself. Most people have no idea what's happening. Before we jump into why this matters, you first need to understand why being the global reserve currency is the United States' secret weapon. On the surface, a reserve currency status might sound boring, like something that only matters to Wall Street bankers, but in reality, it's the invisible engine behind the United States economy. That's because being the reserve currency is like being the backbone of the global financial system. It means every other country needs your currency to do business. If countries want to buy oil, settle trade, or pay international debts, they likely need dollars to do so. So, countries are forced to buy US bonds and hold dollars in their reserves. This gives America access to the cheapest capital on earth. It's estimated the US saves more than $200 billion annually just from this arrangement. It's the greatest financial cheat code in human history. Nobody voted for it. Nobody signed anything. It just fell into place after World War II. When most of Europe and Asia were rebuilding from scratch, the US was one of the last major economies still standing. So the dollar became the default for global finance. But 70 plus years later, most people still assume this is a permanent thing, like gravity, taxes, or Marvel making another Spider Man movie. But it's not. For the first time since World War II, alternative options are finally emerging. The data tells the same story. In 2000, the dollar made up 71% of global reserves. It was the clear favorite, no contest. But by 2010, it had slipped to 66%. Still dominant, but something was shifting, and today it's below 58%. Here's where it gets interesting. Every major crisis has pushed this trend a bit further. After 2008, there was a short term flight to safety into the US dollar. But the long term effects were very different. Following the financial crisis and the Fed's quantitative easing programs, central banks began asking a question they hadn't really asked before. Are we too concentrated in dollar denominated assets? Then, in 2014, the US imposed sanctions on Russia. And now the countries were asking another question. What happens if Washington decides we can't use dollars either? This kicked off the Russia China partnership because for the first time, there was a serious push toward building alternatives to the dollar and, more importantly, to the entire US financial infrastructure. That's where systems like CIPS started to emerge. Systems built from the ground up with one goal: route around US dependence. And then came 2022. The US and its allies did something that rewrote the unwritten rules of global finance. They froze roughly $300 billion in Russian sovereign assets and cut Russia off from SWIFT, which is essentially the WhatsApp for global banking. It's the messaging network that runs most international banking. The point is, it sent a signal to every central bank on earth that the financial system they depend on can be switched off at any moment if they go against Washington. Now, central banks are looking at their dollar holdings and thinking, maybe we need backup plans. For decades, if you were a central bank trying to settle trade between, say, Brazil and China, two countries with no connection to the United States, you had one option: route it through New York using dollar correspondent banking and U.S. regulated infrastructure. Every trade, every payment, and every settlement touched the American financial system. Not because anyone preferred it, but because there was no alternative. Both central banks would hold accounts at a correspondent bank in New York, like JP Morgan or Citi, and they would facilitate the transaction. This arrangement effectively turned the U.S. financial system into the foundation of the entire global financial system. And with this came massive advantages, what economists call exorbitant privilege, which can be broken down into three pillars. First, intelligence. Because when a trade clears through New York, it doesn't just move money, it moves data. It gives the US visibility into global trade. Second, investment. Because every country needs dollars, there's constant demand for US Treasury bonds. This forces the world to fund US debt at lower interest rates. Third, jurisdiction. Because transactions run through US systems, it allows America to act as the global regulator, like we saw in 2022, but countries are now pushing back. You can't replace this system overnight. It requires coordination, and that's where BRICS comes in. BRICS is a group of emerging economies working together on economic, political, and financial cooperation. Individually, they can't challenge the US system, but together they can. Originally made up of Brazil, Russia, India, China, and South Africa, BRICS expanded in 2024 to include Saudi Arabia, the UAE, Iran, Egypt, and others. Now, BRICS represents over a quarter of the global economy and nearly half of the world's population. They're not just trading together, they're building infrastructure to operate outside the existing system. Which brings us to one of the most underreported financial developments of 2026, the unit. If you've never heard of it, you're not alone. The unit is a blockchain-based settlement system designed for BRICS countries. It allows member nations to bypass the US dollar by using a neutral unit of account, backed 40% by gold and 60% by a mix of BRICS currencies. In simple terms, it's designed to replace the role of the US dollar. In January 2026, it moved from concept to operational pilot. Its main goal is to create a neutral pricing system for commodities. Because one of the dollar's hidden powers isn't just that commodities are paid in dollars, it's that they are priced in dollars. The dollar is the global reference point, and as long as everything is priced in dollars, the dollar is embedded in the entire global economy. The unit is a direct challenge to that system. But it can't function alone. It needs infrastructure. That's where mBridge comes in. mBridge is a blockchain-based cross-border payment platform launched in 2024. It allows countries to trade directly with each other. No correspondent banks, no JP Morgan, no Citi, and no New York involvement. This is the key shift. For the first time since World War II, real alternatives to the US financial system are beginning to appear. If transactions start moving through these new systems, the core advantages of the dollar, data control, settlement dominance, and regulatory power begin to fade, and we're already seeing signals. Since 2022, central banks have been buying gold at the fastest pace in modern history. In early 2023, Brazil and China agreed to settle trade in local currencies. In late 2023, India purchased UAE oil using rupees instead of dollars. For decades, the global oil market operated under the petrodollar system. But now, even Saudi Arabia is considering accepting non-dollar currencies for oil. Individually, none of these changes can replace the dollar. But that's not the point. What's happening is something more subtle and more powerful. It's optionality. And optionality kills monopolies. Because the truth is, countries didn't choose the dollar because they loved it. They chose it because they had no alternative. For the first time in over 80 years, real alternatives are starting to exist.